Mr. Mark Selby, how are you, sir?
Mr. Matthew Gordon, doing very well.
I am glad to hear it. We're sort of ramping up for PDAC next week. Lots of people excited and working hard, no doubt, for lots of exciting new announcements coming out. But we're going to talk about the world of nickel for we see you there. So where are we at? What's that price doing for us?
Yep. So again, trading sideways. As I said last time, we're sort of in a range of 15,000 to 15,800, and for the last 2 weeks, we've basically traded either side of 15,400. I'm still really looking for direction post Chinese New Year, and I'll get into sort of where that direction is going to come from in a little bit. We've seen a pop up in the LME inventories. We saw 15,000 tons hit the inventories over the last couple of weeks. Again, going higher as expected. Key piece here, this is still a fraction of the overall reported, balance that we've seen. But in line roughly with where the market's been over the last 6 months, 2 years. So some of that inventory's actually flowing out. Again, as we get later in the year is going to be the big question. Discounts between NPI and nickel narrowed. Again, as we've seen cost pressures in the NPI chain build up. And we saw NPI prices and stainless steel prices tick up a very small amount in China.
Right. And just in terms of general reporting in the sector, it's been, well, we've done our best to kind of work out what's actually happening out there in terms of inventories. But what other sources of data are out there, and what are they telling us at the moment?
Yeah, so we got the February INSG report, and then again 2-month lag, so it gives us the first readout on their view of 2024. So demand up 5%. So they've been increasing their demand forecast as the year's gone on. We've seen overall nickel production up 5%. And then, overall mine supply up 2.4%. So we saw a drawdown in ore stockpiles during that time. Again, a tale of two very different worlds. So you saw Indonesia mine supply up 15%. Nickel production between China and Indonesia combined was 12%, with Indonesia up 14%, China up 6%. But then the rest of the world, nickel production dropping by 9% during that time frame. And again, a bunch of those closures that were announced last year are still rippling through. So we will see, continue to see rest of world supply drop as we go on. In terms of, global finished nickel production, China and Indonesia are now at 2024 for the year as a whole at 75%, and exiting the year, at an even higher percentage than that. On the mine supply, again, we talked about it. There's been really two distinct periods. So we saw through the summer where they clamped down on supply, local ore prices rose up to the market price. But when we saw that Indonesian nickel price come back down a little bit and gap open versus international prices, not surprisingly, we've seen a bump up in ore supply. Back up almost 25% in November, December. Part of that is catch up. There's no way the mines can turn on quite that quickly. That was stuff they had mined, stockpiled, but couldn't ship because they didn't have the license. Refined supplies up 15% November, December. So some of that 25, as I said, gone just in terms of topping up inventories that had been run down. Remember, during that summertime period, Indonesia was so short that they actually had to import the equivalent of 8% of global supply from the Philippines to help keep their plants full. Yeah, again, this is the big question, sort of going back to alluding what I started the show with. It's really going to come down to, how, Indonesia basically is going to choose in terms of, what it wants to do in the nickel market at this point. You've got some government sources saying that, they're going to limit supply to 200 to 225 million tons. In terms of licenses, last year they didn't produce the full amount of the licenses that were granted. And again, the licenses for this year are 289 million tons, which would be, again, another 20 to 25% increase in nickel units. So, which of those two worlds will come through? Again, from my perspective, the drop in nickel prices had an impact on their trade balance, on their current account balance. It makes a lot more sense for Indonesia to have slightly higher prices than slightly lower nickel prices in terms of ore prices paid to domestic Indonesian miners. And again, for that overall impact in the market. We saw ore prices, now that Chinese New Year's over, ore prices ticked up 5% last week. There's been some more anecdotal notes this week about ore prices going up again. So, that is the key number to watch over the coming weeks in terms of seeing which Indonesia is going to emerge in terms of the nickel market at this point.
It's truly fascinating market, very fluid, very hard to call, quite frankly, in terms of timing. How do companies in the West, public companies, I'm going to focus on companies like yourselves. I spoke to an Australian group yesterday. They've got a big old, I think, Ardea Resources, they've got a big old chunk of nickel down there, they think. How did they play that? How do you guys play that in terms of accessing capital, or giving confidence to capital providers that this will all sort itself out? We will see a bit more, accretive growth, steadier growth, or can we expect it to be continually acting as it has, or is it slightly erratic behavior in the last couple of years?
Yeah, no, I think, Indonesia to date has been building out the capacity, to be able to dominate supply, which they have done. I think that's the piece now, is they're at the point where, they have a significantly larger share than OPEC did at its peak in the early 1970s. There was a great FT article picking up on that same theme from a week or so ago. There's been lots of talk about Indonesians wanting to force companies to go, do more value add in country, which, again, the ore export ban was the start of that. So they have a limited resource. You need to make, the right as much money for the country as possible from that limited resource. And so I think, for those reasons, I think in terms of geologically, it's not unlimited resource. They are seeing grade pressures, in certain material. And so, I think there's a lot of things that say, you will see them manage ore supply in a way that creates more value over the long run, which, again, you're not, that a lot of that capacity last year that came off that needs $22,000 or $24,000 a ton, that's not coming, this year. But are you going to see prices closer to 20,000 by year? And that was forecast at the start of the year. And I think that's where, we'll get to that point at some point, during this coming year.
Right. Okay. Let's have a bit of company news. We'll probably start with you guys, kind of the nickel. I think people are kind of keen to sort of see where you are with the TTN investment. Can you give us an update on that?
Yeah, so TTN, we announced an additional delay in terms of that financing closing. Again, there's an administrative tick the box that they need to do that they hadn't realized was necessary in order to finish securing the financing. Again, they are 100% firmly committed to closing this deal. For those of you who aren't in Canada watching this, that story got a significant amount of media attention, as it was one of the First Nations investments in a mining company and one of the largest to date. And so, it's a very high profile investment for TTN. And I can tell you that they're, absolutely committed to getting it closed here as quickly as possible.
With regards to the spin out news with Noble Minerals, again, what are you trying to achieve there?
Yeah, so we've gone from the very aptly named Explorco to the equally sexy name East Timmins Nickel, at least for the time being, in terms of it's a private company now owned 80% by us, 20% Noble. It's our eastern portion of our properties. Again, I think one thing to emphasize here is, we have a whole portfolio of assets here, whether it's Crawford, there's our main project, the entire district scale potential where we'll have 9 resources in place by mid-year. East Timmins Nickel takes, about a third of those, and puts them into an area there. And then we've got our, a downstream business, which continues to advance quite well and having some great discussions with big stainless steel and alloy producers globally in North America and in Europe. And so, having that entire portfolio of assets gives us a way to basically raise capital at that asset level without having to do anything at the equity piece. And I think that's something that people, really don't understand, is in terms of, the capacity to be able to, generate cash, from that asset portfolio without having to do equity raises.
And what let me just remind us the extent of the kind of targets and the properties that you have, which might fall into that category.
So Crawford on its own is second largest nickel reserve, second largest nickel resource. We have 25 times the target geophysical footprint that generated that kind of reserve resource for Crawford. We've got 10 targets that are bigger than Crawford, and we will be publishing total of 8 additional resources by mid-year this year. And with that entire resource base should have a contained nickel footprint that's larger, than the total endowment that Sudbury had. So, that's the kind of scale that we're talking about here. And a couple of those deposits, we expect to be, bigger and better than Crawford as we move forward.
But obviously, anyone kind of looking to kind of step into that is going to need, I guess, a big balance sheet potentially. They're going to need a kind of very long-term view of extracting value there, and I guess collectively trying to understand how all of these different properties can sit together. Is it multiple potential JVs or partners or agreements, or does it sit under one banner?
So the key piece here is, again, getting back to your sort of original question around sort of how Indonesia is going to play out and how other companies can participate. At the end of the day, again, Western and European governments want China out of the supply chain. Being dependent on Indonesia and China for material as critical as nickel. And again, over the last few months with Trump in, we've already seen China ratcheting up, the limits on various other minerals. Nickel hasn't quite got there yet, but it's with the domination they have, it's now completely within their grasp. And so companies and governments want nickel supply from elsewhere. We're one of the few projects that can come online this decade with the permits coming from Crawford. And we've had very, very few new discoveries of any size and shape. And so, if you want nickel, and there will be companies that want nickel, there are people in other parts of the world other than China, that have a very long-term view of the scale of the kind of resource that we have and access to the kind of capital that's required to develop it. And so, again, I think you're going to see a bunch of things happen on that front, in the near future.
Right. And I guess, and coming back to one of my earlier questions, is how do public companies sort of take advantage of this type of environment more broadly? So we've got a lot of company news today. We'll start with the big boys. Obviously, MMG to acquire Anglo American's nickel business seems to be the one that's catching the headlines at the moment.
Yeah, so Anglo American made about a year ago, when BHP was trying to acquire them, said, look, we're going to scale back and just focus on iron ore and copper. They sold their Barro Alto, and so they exiting their production assets. Barro Alto got sold to MMG, which is effectively a Chinese-backed company. Again, from our perspective, helpful. It's effectively, Brazil is one of those areas that's splitting between the West, and the BRICS. And so the fact that there's more nickel capacity now in Chinese hands just reinforces the case for us, and is super helpful on that front.
Right. Okay. We shall see what they eventually do. That's quite a big deal. I mean, given that sort of that we're seeing China starting to buy up a lot of these projects and resources, meaningful ones anyway. And sort of looking to your sort of travels in Asia and also the Middle East specifically recently. Are you seeing other sources of funding coming in and maybe kind of picking up the kind of ex-China opportunities?
Yeah, no, for sure. I mean, obviously, with Korea, the big chunk of the battery supply chain, is based in Korea. That's not run by Chinese companies. And so, again, we've seen renewed interest now that the election's over and electric vehicle growth, is firmly resumed. Going forward, you'll see that those companies continue to participate as an offtake partner. But I think that, the big exciting development, in the near term for, companies in Canada where China, is really not able to invest at all, is the Middle East. They've made a very clear shift that they want to diversify in their investment base away from oil into future facing industries, and nickel's role, in a range of commodities that are very future facing in terms of their applications, is a real natural fit. And so, the quantums of capital they have, the long-term views in terms of how they want to transform their economy, are really nice alignment there. And again, for the kind of check sizes that they're able to write, in investments in projects like ours, or even, looking at, wouldn't be surprised to see acquisitions happen here in the not too distant future with some of these groups, is a very, very plausible path going forward.
The other one, which I guess caught my eye, was something you and I've talked about, maybe not for about 2-3 years, was the metals company, as it's now called, with their picking up nodules from the ocean beds, also in the news.
Yeah, big processing step forward. So Jeff Donald, who's a former colleague and friend of mine, former colleague from Inco days, has been managing the metallurgy process there, and they had a success commercializing using the existing ferronickel facility in Japan at PAMCO to run a commercial scale pilot where they had taken nodules that had gone through one step of processing, and then were able to basically pull those the metals and those nodules apart, where they produced a nickel cobalt copper alloy that that could be refined further. And this, getting it to this stage, gives them a lot more opportunities in terms of where it can be refined, and then a silicon manganese product that can be usable in the metallurgical industry. The key thing with these nodules is there's only about 1 to 1.5% nickel in them. Some refer them as manganese nodules because they are 25 to 30% manganese. So finding a good home for all that manganese is critical to the economics there. So again, good to see a new source of production coming down the pipe there.
Do you think we're going to see a little bit less emphasis on from the eco warriors about, well, what's it doing to our ocean beds and so forth? They've done enough work on that to kind of prove that actually this can be extracted, I think the phrase they want to use, rather than mined safely.
Yeah, I mean they've done a pile of research to demonstrate the impact they have on the ocean floor. Again, there's some different views on that, but again, obviously in the new Trump world that we are living in, there's a little less emphasis on the environment these days than there would have been under prior governments, and that's been reflected in their share price. Since December, they've seen a tremendous run up in the share price there.
Okay, and talking of processing news, FPX Nickel.
Yeah,
so
good to see our fellow ultramafic deposit continue to advance. So I'm assuming they're using the share process based on the byproducts, which is a fertilizer and cobalt product, which is what comes out of processing material using share-based process. So, they were showing that they could take their warite concentrate and then produce a saleable nickel sulfate product from that. Again, so far, based on the scoping study results, about $400 million in initial capital. And then a relatively low byproduct cost after including the byproducts that are there. So again, very clearly, demonstrating the Dumont project has done work. That's the advantage is when you have high grade concentrates like that come off of these ultramafic nickel deposits, whether it's the warite concentrate that Martin produces, or the higher grade concentrates that we produce, because these are relatively simple mineralogically and relatively clean, it gives you a relatively low cost path to produce something that can go into any of the nickel industries. And again, it's something that I think a lot of investors still don't really understand in terms of the value add from these ultramafic nickel deposits.
And how are they getting on the development through to feasibility side of things?
Yeah, so they reported as well during this 2-week period. So they are going to begin their environmental assessment process. So this is the federal process that we're just about complete through, which we expect to complete later this year. With the federal government, they're embarking on that later this year. They said that they're going to complete their feasibility study for the project by 2027, and I think they're still targeting early 2030s type startup. So again, one of the few projects that's out there, and Martin team are doing a good job advancing that project forward.
And in other news, Power Nickel is no more.
Yeah, so we're talking the next stories, some financing raised by companies that no longer have nickel in their name. So not surprisingly, Power Nickel, the original deposit that Terry Lynch had was a nickel copper deposit called NISC. Nearby, they've made these very high grade copper and PGM discoveries, and they really are a high grade copper PGM story going forward. So not surprising, they changed their name to Power Metallic. And they, did a big Quebec flow through deal, and they upsized that deal. I think we talked about the deal last time, but they've upsized it, to $50 million. The other big news, and it's good to see some of the big BC money guys getting into the story. So Fiore Group, which is Frank Justra's group, is effectively, taking control of premium resources. Again, they were premium nickel at one point. They've got a polymetallic deposit down in Botswana. They're raising $36 million and upsized to $44 million. That'll basically recapitalizes the company. They had some debt that they had to do, but effectively, more than double the share count. One of the guys out of that group, Morgan Lekstrom, is taking over CEO. So again, good to see, a well-backed story that's got some nickel in it. Again, as much value or more from the copper and other elements, but good to see that project moving forward.
Okay, and then before we bounce over to Australia, just one final one. EV Nickel, also a little bit of news.
Yeah, so they've got in their property package a past producing mine called W4 had been mined in the not too distant past. And so they've announced that they got a mining lease for that operation. So if they did want to get in there and start producing, that the mining lease is one of the key pieces, key permits that you would need to be able to begin mining. I don't know if they have I don't think they have the rest of the permits. I don't know to be able to start operation, but getting that mining lease is a key step that's there. Talking about Australia, Western Mines Group, their Mulga tank, again, a big ultramafic, similar to the kind that we're drilling in Canada. So they drilled a big deep hole, 1,700 meters deep. Within that deep, you had mineralized intervals of more than 1,200 meters of sulfide mineralization, grading anywhere from kind of 0.23 to 0.32% nickel. So good to see. Again, in terms of the sign of the times, and generally, when people are running away from a metal, sometimes that's the best time to start to buy. So Poseidon Nickel just basically closed a deal to merge with a gold company and the Silver Swan Mill, which is really the only other nickel sulfide focused mill in Western Australia. It's been on care and maintenance for quite a while. Is going to be repurposed to process gold. I know we looked at doing that very same thing back when I was with RNC with the Beta Hunt material. So, again, that really is further derating, Western Australia nickel capacity going forward. So, when I talk about at the beginning in terms of, Indonesia being able to, look at moving the nickel price a little bit higher, part of the reason, that $20,000 a ton nickel price makes sense to me for this year is that, a lot of that supply that got shut down last year really would need $22,000 to $24,000 a ton nickel on a sustained basis. And so, from my perspective, Indonesia is just leaving free money on the table by, not pushing prices higher, which is, again, they've been pretty smart so far in terms of extracting investment, extracting value for the country, from those nickel resources to date. And I think, we'll see them flex their OPEC muscle this year and push prices a little bit higher.
What's this thing for the kind of survivors as well? So we're seeing some nickel companies come out of nickel and go into other things. You mentioned Poseidon there, obviously, and there's a few others who gave it a go. But for the guys who are left, it suggests to me that the projects are more real than what was there before. So in terms of whoever's left must have something going, something about them. Will they be the main beneficiaries of all this sort of general pricing moves once Indonesia's done its thing?
Oh, 100%. Like, if you went back sort of 4 years ago and looked at, what are the list of the most advanced projects, being run by teams that can continue to advance them towards production. You had Centaurus with their asset in Brazil. You had Dumont with, privately held by Quintera. You had FPX Nickel, being driven by Martin Turine and team. And then you've got our project with Crawford. Fast forward 4 years later, those are the four projects, that have really continued, to advance towards production. And so, that's, in terms of, being able to make real moves on the permitting side, getting feasibility studies done, attracting some cornerstone outside shareholders and investors. That's the group. That's kind of the core group today, and there was a core group a while ago. So, as you said, there's the fact that there's been the choice set, is really focused in on that set of operations. And I should also mention, sort of Talon Metals in the U.S., again, is one of the only potential U.S. suppliers. And given what's happening in the U.S., is really going to be the benefit. That really is, the sort of the key target set going forward. And the fact that there's, not that many choices for consumers and governments who want nickel supply to come should benefit us going forward.
Okay, Mark, well, I appreciate time today, because my major takeaway in all of this is that this isn't just China, Indonesia, Philippines anymore. There's some big players with a much longer term view about the future of nickel. It'd be nice to sort of see how you guys, I guess, take advantage of that, and how those groups set themselves up in the coming weeks and months. Mark, appreciate your time. We will see you. I look forward to seeing you in Toronto. I know you're busy, but we'll make some time. We'll see you there.
See you soon. Take care.